And with the tariffs starting to fade into the back burner, at least for now, should the Federal Reserve actually start cutting rates, or is holding steady the right move? Joining us now on set, Bleakley Financial Group CIO Peter Boockvar, also a CNBC contributor. Is Jay Powell behind the curve?
No, because he's as clueless as we are about how all this plays out. And
That's comforting.
Well, just as Trump gave China 90 days, he essentially gave Powell 90 days, because Powell will then wait to see how those discussions go. He'll wait to see how the reciprocal discussions go, and then he'll see, okay, what's the end game tariff rate, and then he can figure out how to move from here.
So, but it's interesting what you said. In a way, every time the president does this thing with the 90-day reprieve, that makes the Fed less likely to cut rates, because they're going to say, well, we have to wait and see what happens after 90 days.
I think that's the case. And just as the first 100 basis points of cuts, I felt was more of a rate tweaking cycle rather than, okay, let's rate cut in response to some external problem. I think this time around, even if he cuts a few times, it's going to be more of the same, more further tweaking of rate cuts.
By the way, the president himself, while he's in Saudi Arabia, just gave that speech we all saw this morning, has now posted on Truth Social about this very thing. He says no inflation and the prices of gasoline, energy, and groceries and practically everything else are down. The Fed must lower the rate like Europe and China have done. What is wrong with too late, Powell? Not fair to America, which is ready to blossom. Just let it all happen. Peter, it will be a beautiful thing.
Well, the one thing we saw from the first 100 basis points of cuts was higher long-term interest rates. And now we have the 10-year yield kissing 4.5. And, okay, let's just say Jay does cut a couple more times. Who's to say the 10-year doesn't go to 5? And what do you want? Do you want a 3.5 2-year and a 5% 10-year? Or you want a 4% 2-year and a 4.5% 10-year?
Sounds like you're saying that the bond market is going to do what it wants. Because you just said that if we cut again, that rates may not come down, they may go up. Because here's the dirty little secret, and the three of us can just talk about it. Nobody else has to hear this, wink, wink, which is if somebody wants to buy a home, that mortgage is probably based on the 10 or 30-year government bond. Those are the rates they care about. They don't care what the Fed does,
even if
those interest rates go up.
Yeah.
If I had $1 for every person in commercial real estate and those looking to buy a home last summer saying the Fed rate cuts are going to save me and lower rates across the curve and everything's going to be fine, I'd be rich.
You could buy a house.
A lot of commercial real estate people actually get their loans priced off the 5-year. Some SOFR plus, where maybe they got some help. To your point, Brian, the residential buyers off the 10-year, but a lot of commercial real estate people are in the 5-year, where a Fed rate cut may not be enough to help.
Mm-hmm. And that all goes back. Do you think, Peter, the deficit is a big part of the story? Because some of us have been pounding the table on this ad nauseum, and others suggest, no, it's all about real rates. This is all because we're going to experience an investment boom in the U.S. Or, there's many other factors that could be pushing long-term rates higher for perhaps better reasons. So why is it that we're at 4.5% on the 10-year? Why are we at almost 5% on the long end?
I think one of the factors could be those, but it can be a bunch of them. And one of them, to me, is foreigners are rethinking their position in U.S. assets.
Are they, though? Did the data show that?
I think it's happening on the margin. What I'm looking forward to, at least on the stock side, are the 13 Ds and Fs that are coming out soon. Because as of December 31st, before all this happened, and Mag 7 were at the highs, I personally think the Mag 7 trade is over in terms of its dominance. Foreigners are going to show less holdings of these stocks. And that, after certainly April 2nd, caused, I think, a further rethink of, wait, I got way over my skis in U.S. assets, whether it was treasuries, stocks, corporate bonds, and it's time to lighten up.